Hello there everybody, and a very, very good afternoon to you all, and welcome back to another live trading session here at Taurex and a brand new week in the markets. It's very good to have you here. I know I'm on slightly later than usual. We have tweaked the stream times just a little bit. I know that there's some people that watch the streams who can't really watch them live and have to watch it on catch up. So hopefully these later streams, for me anyway, even though it's at the end of my working day, but that's fine, will be more beneficial to those who want to actually join live and maybe ask questions further down the line. So that's why we're on slightly later. I just want to apologise for any sort of inconvenience over the next sort of couple of weeks or so. Next Wednesday I'm actually moving out to our office in Dubai permanently, so it's not going to be here anymore. It's going to be out there, so I need to sort of set up and replicate the setup that I've got here out there, which isn't as easy as it sounds because there's lots of equipment and lots of things to set up and lighting, etc. That goes on in the background to actually get these streams out to you live. So in that sort of time frame, it is great to be in our Discord channel because I will be able to update you a lot easier if there's any sort of last minute changes, but fingers crossed we're okay, and we're planning to stream at 6 p.m. UAE time, which is 2 o'clock UK time. But again, if anyone's confused or any questions, then feel free to reach out to me in the Discord channel and I will be more than happy to assist with that. Right, so for today, of course, it's a new week in the markets, which means our sort of weekly preview stream. So today on the sort of bucket list or agenda, we've got an update on our crude oil trade. I've actually managed as well to finish the trading, sort of update my trading journal that I use personally, and I want to be able to share that trading journal with you throughout the year. I haven't quite made the graphs and stuff yet, but I've managed to create the tab for January at least, and at least fill in the oil trade, which is my only trade so far of this year. Every time I place a live trade on the stream, or a trade that I'm going to say on the stream that I'll personally be placing, I'm going to be filling that out in the trading journal, so you can see exactly what I've traded and what my performance is. So good or bad, we'll see. Hello to those who are joining as well in the Discord channel, and also we've had a message on YouTube. Hello to you, Dan. Oh, Dan, hello to you. It's good to see you. Yeah, I'm doing very well. I hope you are as well. Let me know how it's going. How's trading been for you? It's good to see you joining the live streams here. We're just getting the live streaming up and running here, and we've just made our community on Discord. So feel free to join us on Discord if you like. I'll drop the I think the link's in the description actually. So if you do want to join that, feel free. We're setting everything up now for this year, so it's good to see you anyway. So let's first of all break down the week ahead in terms of economic events. I know some people, get put off by the fundamentals, but they are really important. Just to not necessarily, we don't need to go into massive detail on each individual one, but as a trader, when it's a Monday and you're planning your trades for the week, something I've always done is go through and, as you'll know, Dan, because you've watched my streams before, is go through the top events, like the red list, the high impact news events of the week, just to give me an idea of where the volatility is going to be and where any potential opportunities are going to be as well. It's just a really important task that I actually do, live in front of everyone, that I would do if I wasn't streaming. I would do this, so that's why I do this stream on a Monday. Been busy creating some EAs for the MT5 scalping, mate. You made one for the Piranha strategy. Wow. That's cool. How is the Piranha strategy for you? You've still been enjoying it? I will introduce a little bit of that into the stuff we do here. I've just been so busy, obviously setting everything up, that it's been difficult to actually get involved in that. But that's cool that you've created some EAs for that. That's cool. I'm interested to see how that performs. Let me know. So we are currently I'm on the Taurex Plus, which gives you basic access to AI news sentiment, economic calendar, featured trade ideas, economic insights, Swissette, which is like an account analyzer tool, all in one place. So you do get a 30-day free trial on that. If you head over to tradetaurex.com and head over to Taurex Plus, you can get a free trial with this. But this is the economic calendar that I use, and as you can see, on Monday, which is the highlighted in green there, we haven't actually got any high impact news events at all. The next high impact news event we've got is actually on Tuesday, which is the PPI. So for those who are unaware of what PPI is, there's a little breakdown here, and it's basically like services inflation. So another inflation print out of the US. Obviously, we had that really, really strong NFP print on Friday. It's working. Also for euro dollar, I thought that when we were looking at the piranha strategy, I actually thought euro dollar would be a good one, Dan, because of that. That's cool though. Euro dollar is actually probably a bit less volatile, isn't it, than cable as well. So that's obviously where the piranha strategy thrives. Nice. Okay, so we've got PPI, 3.7% is the forecast. Previous at 3.4. We're getting way ahead of ourselves when it comes to sort of inflationary prints. So the markets are expecting a lot hotter US data than what's forecasted. We did get a really hot NFP on Friday. That was quite substantial. So whether this continues that theme or not, we shall see. That's important for tomorrow. And if you head into Wednesday, it's pretty much another inflation day, right? So we got the UK inflation, 3.5% previous. The forecast is for 3.4%. And then we've got the US inflation as well, which I will be covering live as the event comes out. So I won't be streaming at 4 o'clock UK time then. I'll be streaming at 15 minutes before the US inflation. This is a really important one. Last year, we didn't really focus too much on inflation prints because it was all about what the Fed were going to do. And I know that is still the case. But now we've had this switch to this higher for longer narrative. There's a lot more emphasis on inflation all of a sudden, and this is going to be a really volatile and an important print. So our first look at inflation for this year, 2.8% is the year-on-year forecast. 2.7 was the previous. So again, it goes without saying, if we beat estimates there, then we could be looking at some more dollar upside. But it's so overextended now. It's only going to take slightly weaker data this week to see maybe a little bit of a pause in the US dollar, which I'm going to talk about on the charts in just a second. Thursday, we've got some, if you trade the Australian dollar, we've got some employment statistics reports, and we've also got some more inflation data out of Germany, and also some retail sales out of the US as well. And Friday is all about China data. So if you are trading those Asia stock markets, then Thursday overnight into Friday will be a great time to have a look at some of those as well. Okay, right. So I'm going to delete this analysis now because I don't want to keep shouting about it, but we had a really fantastic trade idea that was not actually put in the Discord channel, but was actually analysed live on the stream. That's why it's important to tune into the streams. I can't post everything I do, but the live streams are basically my me spilling out the thoughts that I have in the markets and just me trading. Really, that's the point. So really nice trade idea on oil, which has now hit my take profit. We had a liquidity level down here into a 1 hour demand zone, straight in, went into profit there, and then as you can see, this absolutely took off. So as first trades of the year go, a 15-1 winner on a 1 hour chart is about as good as it gets. This is not necessarily something that happens all the time. This is probably actually a bit out of the ordinary for me, if I'm being completely honest, but the analysis was perfect, right? So I was targeting October's high here at 78.3, and I'm happy that I had my take profit there. Even though you can see it's gone further, you can actually see that when we come into this area, we did initially start to sell off. And you can imagine if you was in that trade and you hadn't cashed out yet, then you may have, felt a little bit, what's the word? I don't know, like started to get emotional a little bit because you'd see your profits, falling a little bit. But as you can see, I already took my profit here anyway, and we're blasting out even higher as well. So what's important that we do is after we close out a trade is we head over to the trading journal, which I've now, my trading journal, which I've got, which I'll share with you now. You can see that, hopefully. Yes, you can. You won't be able to see me, but you can see the trading journal. So I will add to this trading journal. I will make it look a bit better. I just had to quickly stitch it together for this year. And this is the first time really that I'm going to do a month-on-month analysis of my trades. Before I was a little bit slack with it, and I've made a promise to myself that I'm going to do every single trade that I place. I'm going to place it in the trading journal, and I'm going to do sort of a graph which shows my month-on-month profit on my own account. As you can see, we've got that trade in there now. US oil entry 73, exit price 78. Our closed P&L was for me was $400, which amounted to a 4% gain. My strategy was liquidity and demand zone, and I always put a confidence level in there as well. My confidence level in that trade was confidence 5, which is as high as it could be. In the comments, I normally put just about what I've done, which is a liquidity grab on the 1 hour chart into a demand zone, 1% risk because it was a 1 hour time frame chart. A win and loss, which automatically updates, and then any lessons that I need to learn. So if I make a mistake, this is a great time to put lessons, or if I've got a good model trade like this one, then it sort of just reminds me of that's the way you need to trade. You see I've got some notes up here at the top as well, which are basically some of the main quotes that I find beneficial. So I always say to myself, every morning I look at these notes and it says, always follow the rules, just in case I am tempted to deviate. And it also says anything can happen. Now, if you haven't read any of these books, let me try and get them. Any of these books, then I would highly recommend that you do so, because that's where I learned. They're quite famous books, really, but that's where I learned the anything can happen. Where, when you place a trade, you've done your analysis, you've done everything you can't always be right, and you're sort of left down to whatever the market wants to do, it will do. So all we can then do is control the risk management and the risk management of the trade. That's all we can control. So I'll make sure I have set rules when I follow my risk management. So I took half of the profit off at 1-to-1, and then at 2-to-1 I took some more off, and then moved my stop loss to my entry level. Which is, I should show you here, and that amounts really to, even though it's a 15-to-1 trade, you could say, well, if you just left the trade alone, you'd have made 15%, not 4. Well, but I know that this isn't necessarily something that happens all the time, and that's why I decided to, I've implemented rules over time and experience that mean that the best way to do this is to take some money off the table as you go and protect yourself from your trade sort of going against you and hitting your stop loss when you're already in profit. Don't be greedy. I should have just said that. Don't be greedy. So even though it's 15-to-1, I could sit there and say, if I put 2% on that and left it alone, I'd have made 30%. But that's just the wrong mindset to be in. Instead, be happy with the analysis. Be happy that you followed your rules, and then move on. Well said, Dan. Thank you. That's pretty much what I meant, but I went a long way around it. Also, when that happens and your trade analysis is complete, we don't need to dwell on it too much. We can just start again. And looking at crude oil prices, obviously, at the moment, if you look at the daily time frame, you can see that we're quite clearly on some sort of breakout. However, we are still not really showing any clear direction, if you look at that. So, if crude oil is to continue much higher, and I'm talking about a breakout here, then I think what we probably need to see is, higher inflation data, of course. But if the inflation data starts to soften and the economic data starts to soften as well, then it wouldn't surprise me if what we then see is basically a rotation back down towards the sort of mid-70s or 70s. That's also why I'm happy I'm out the trade, because if we look at the price action of oil really since 2023, although we had a bit of a breakout here, we reversed all of it, again, don't be greedy, and you can see that really we've just been chopping and churning between 62 and 85, and we're already at 79. So there's a chance that we run into some resistance here, but it will require softer economic data this week and potentially softer inflation as well. So no trade idea on oil just yet. My main trade idea that I want to share with you today for this week is the S&P 500 analysis. Now, I put this analysis in the Discord channel, in the Trade Ideas channel, which basically was me showing you that we had some sort of, when we had that dip over Christmas, we had this, call it a triangle pattern, consolidation pattern, and we can see that the bottom of this trend line has now been broken, And I always said that if we do break that, it'll be because of either an inflation print, I don't mean to say inflation print, inflationary print, or a recessionary print. So stronger data, basically. The markets aren't really reacting well to hotter data at the moment because it's basically squashing any, prospects of interest rate cuts. That's pretty much what's happening. So this week, if we do manage to see, like PPI, which isn't as hot as what the markets are forecasting, or CPI, which isn't as hot as the markets are forecasting, I think this area here could be a really nice daily, daily play. Dan's correct. Or the alternative is the data does come in hot, and that, we're continuing to talk about inflation, and we're now suddenly, we're now sort of like hawkish with the Federal Reserve, which the markets won't like because they won't like inflation. Then, as Dan has just said, the breakout of this triangle we can use as a retest and target this bullish order block or this demand zone. I like to call them order blocks or demand zones. And then potentially even lower, right? Because if we do manage to break that, that's a significant... Sorry for the mess. Let me tidy it up a little bit. That would represent quite a significant break of structure, right? Need to tidy these up as well. There we go. That would represent quite a significant break of structure if we do get that. And I think if we do get that, we could be... Hello to you, Bobby. Good to see you. And thank you very much for joining in today. I hope you're doing well. Hope you enjoyed the oil trade. I know you like trading oil. So then we could be on for a further correction, down towards the sort of 5,600, 5,550 mark. But I've always been burnt trying to sell the stock market. And I always find that it's much easier to try and get in dips than it is to try and, be a hero and try and short, a predominantly bullish asset class. Therefore, I quite like the idea of actually placing a 2% trade at this bullish order block. Because if we do manage to test the bottom of this trend line, then we're already at 1.83 to 1. So I could potentially have locked in some profits and protected my stop losses as well. And if we do continue higher, then even great. We could be on for the next bull run in the S&P 500. So that is my next trade idea that I will be personally placing, like a buy limit trade. So up to you. This is just showing you really what I'm doing. I'm not necessarily, I'm not telling you what to do at all. I'm just literally showing you what I'm doing because I want people to, see the way that I trade, and this is the way that I do it. So I'll post that in the Discord channel. In the trade ideas section. And I'll put S&P 500 if I can type, that'd be great. S&P 500 buy idea from today's stream. Good stuff, Bobby. I love to hear that. I'm not the best, am I? But I do appreciate the kind comments. And yes, Dan, exactly that. No trade advice. This is really just me showing you exactly what I'm doing for transparency, really, because I'm a trader myself. So that's what I like to do. So that's my idea for today. My main idea for this week. Now we can talk a little bit about the US dollar. I mean, we're climbing, aren't we? We're continuing to climb, and it was quite interesting to see what happened over NFP when we sort of wicked above, and then we almost came down a bit lower, but now we're just seeing that grind higher. I have to be honest, and you could say, oh, you're missing out on more gains for the US dollar, but we've just blasted up to a new high. Right, we've broken this market structure high. our next leg looks a little bit like this. So I'm always, I don't like to buy the market when we've just created a new high. I prefer to wait for pullbacks like this or pause periods. And I think we could be in for, a pause period or a dip lower, maybe down to 109, 108.6, then a move higher up towards what was my 2025 level at 112. It's probably, and the way this is going, it's probably a little bit of a light prediction. We probably should be aiming for something a bit higher, but that could be a good target for me to look for. But I want to see a pullback first. So what I'm trying to say here is that we've all switched from expecting all these interest rate cuts and being bearish on the dollar to now this thing where we're worried about inflation ramping higher again, and we're actually talking about maybe 2 cuts this year maximum, which is astonishing compared to where we came from. But as I've always said, and I'll continue saying it, that's now all been priced in. So in order for this dollar to continue like it is, it's going to need considerably more stronger data coming through. And we might get that. And if we do, that's fine. But the risk here is that if the data disappoints a little bit, and even just a little bit, a lot of this tension of this overbought dollar is going to be relieved. And we could see a fall in the dollar. And that's why I've got my sort of alerts on that. You can see it on like the pound. Look, I mean, we've come so far. Euro dollar, look, we've come so far again. It wouldn't surprise me if we get a period of pause. That's why I'm not too interested in trading the dollar just yet, because I want to see what the inflation print's like this week, then make a judgment for, okay, Connor, yeah, look, the data's clearly going to keep coming in strong. We need to really look for dollar buys on the lower time frame. Then I will, but instead I'd rather wait for the data to come out, and if it's just in line with expectations, or it's a little bit disappointing, then look for that pullback. Not trade it, because I'm still bullish on the dollar overall. Wait for that pullback, then we can start getting in again. Interesting one on gold as well, because we can see that the gold price is really threatened to trade above. Again, this seems to be marking loads of triangle patterns. I don't know why. I just sometimes think they're really nice on the higher time frames, and you can utilize smart money concepts around it. But it is what it is. This is what I've come up with, and you can see we've actually had a little bit of a liquidity grab there, and we've actually created almost a bearish engulfing candle off of that liquidity grab, which is quite bearish actually for gold. So we may even see a move back down towards 2620. But there is a broader a bigger play coming, I believe, and I think it's higher. But what we might see is this. Not to that extent, obviously, but that's roughly what I'm looking for. And I thought that maybe we were, good to go for this breakout, but not quite a convincing close. That's why I always say wait for like a solid close above your levels. And that's why I don't trade buy stops really, because if you traded a buy stop here, you would have been, in drawdown at the moment. I'm not saying it can't reverse and turn around. So I do still remain bullish on gold. You can see silver's down 2.7% this today, and gold's only down 0.9. So there's more strength in the gold market than there is in the silver market. So if you're going to buy any of them, gold's the best one. However, I'm still waiting for a really solid close above the the top of this triangle pattern, or this upper trend line, should we say? So yeah, to summarize, I'm never really someone who trades multiple trades per day. I don't have time to anymore. I've had to adapt my trading strategy. I'm really only looking for some high quality setups, and I think we've got that in the S&P 500. Therefore, I'm not going to be chasing stuff on the dollar, or I'm not going to be chasing this just yet. Let's let that all play out, and then we'll see how we go over the next week or so. But yeah, that US inflation data on Wednesday is going to be really, really important. Okay, right. I'd just like to, I'll pause for sort of 30, 40 seconds just to see if anyone wants me to go through anything else. Any questions about what's coming up this week. Let me know in the chat section, where on Discord or on the YouTube, and I'll be sure to answer that for you. Yes, Bobby, I do still trade the trend rider. I tell you what. Yeah, because I've only really just got my trading year up and running again, and I was doing quite well on the trend rider, and it's definitely the secondary strategy of what I use, right? So the trend rider, because we haven't got at Taurex the sort of the content around the trend rider, I didn't want to just start confusing people by talking about that strategy. However, I will start adopting that into my streams for the foreseeable, because I will be trading it, and now I've got my trading journal up and running. If I place a trend rider trade, then I'll put it in there. Or maybe I'll do some stuff behind the scenes and get together a PDF that people can download, because it is a strategy that I do trade, and it's got really nice mechanical rules. So the short answer is yes, I do. Okay, fantastic. Right. I'd just like to thank everyone for tuning in for today. That was your top trades or top events of the week stream. Tomorrow, I'll be back at the same time, live trading. Any updates on any trades, then I will let you know. Please feel free to join the Discord channel. The link is in the description. It's the best place to, chat to me every day and, share trade ideas with the community. And it's something that we're looking to build quite heavily in 2025, and we've got some really exciting tools. We've got regulated trading signals going in there as well, and we've got Atmos, which is our broker-backed prop firm, which is going to be relaunching this month, I think, and all the content on there has been recorded by me and edited by a fantastic team that we're working with. So I'm looking forward to seeing that. So we've got all bases covered. I do wish everyone has a good trading day for the rest of today, and yeah, I will see you all tomorrow. Thank you very much.